Well, we'll have so many earnings to actually digest and look out for. Case in point, of course, being Bajaj Finance, and then Unilever as well slated for today, and a bunch of other numbers as well. But what a market yesterday. The fact that we almost made it to the 24,300 point print at one point in time for the Nifty futures, scaled back a little bit from there. But nonetheless, a solid 185-point move is what we closed the day with for the Nifty futures alone. But let's now welcome on board Ajay Goyal, the CFO at Vedanta, and Arun Misra, the ED, to talk about how their performance has been. Ajay, if I could start off with you, first of all, congratulations on successful implementation of the demerger for the full year of FY26. I wanted to understand the aluminum business has achieved a 38% EBITDA margin, while Zinc India recorded the best-in-class margin of 56%. Are these elevated margin levels sustainable?
I mean, the year gone by has been truly historic. If you look at both the fourth quarter and total year, all three key metrics, be it revenue, EBITDA, and the PAT, has been historical best by a big margin. You're right, in a couple of large businesses, which is zinc and the aluminium, our margins are quite superlative. So the margin is right now in aluminium is almost 38%. Zinc, it is a 50% plus. It is a function of two, three areas. Firstly, the entire volume augmentation lead to lower cost. Secondly, overall cost of production has been a historical low, and both for zinc and the aluminium, now they're part of a global top decile cost curve. And third focus area for us remains the entire portfolio rehashing from basic to value added. We do foresee in the near future the margins will hold at the same levels, if not better off.
Ajay, demerger and listing are the next big trigger, and analysts believe that listing of the 4 new entities could take anywhere between 4 to 8 weeks. What is the timeline that you think would be for the listing of these entities?
What we have announced last week that the demerger will be effective from 1st May, and that also become the record date. We'll be filing for a listing application with the regulators in the first week of May. And we foresee that all the 4 companies will get listed, and all the 4 new companies stock will begin to trade between 15th June till end of June. So listing and trading all within the Q1.
Arun, hi. Morning. How will the balance sheet of the demerged entities look like, especially with respect to debt allocation?
So the principle for debt allocation has been the ability of the every unit to serve the debt, and that is on the projected cash flows, projected EBITDA, and their capex requirement. So the whole idea is currently say 0.95 EBITDA to debt in consolidated VDL will get distributed, but we are ensuring that no entity sees excessive pressure on the debt EBITDA side, so that their ability to draw capital from the market is not compromised. So while it may overall remain at 0.95 to 0.65 as Ajay says, but individual units may vary from 0.45 to maybe 1.45. So it all remains within the similar kind of or better than the industry peers as far as debt EBITDA ratio is concerned.
Right, Mr. Misra, what will capital allocation priorities be for each individual business?
So for Vedanta, it has always been capital allocation for growth because we are primarily a growth company. Second is always on performance improvement and debottlenecking. And some part is which is the sustenance capex, which is mandatory for replacement of assets that sees the end of life. That is always there built into the business. So allocation priority does not change. Every unit has to come out with their own growth plans and then make capital available. The hurdle rate for all units will remain same, that nobody would be investing in a project where the IRR is returns are lesser than say 18% or 19%.
And Mr. Goyal, Vedanta has always been a hefty dividend paying stock as well. Will this be the case for all the demerged entities too? What happens post demerger? Will the rule of paying 30% of profits as dividend still be applicable to all the 5 new entities?
As we demerge all the 5 new businesses, will have their own board, which are independent, and they can devise the new policy on dividend. However, overall Vedanta legacy and the philosophy will not change. The way to look at post demerger, not only dividend, but what is the shareholder return? If I look at last year, pre demerger, Vedanta's TSR is almost 50%. And Vedanta in the country are the top three companies in terms of wealth creation. So all the five companies will remain high in terms of dividend, at the same time rewarding shareholders through TSR, which is a combination of a dividend and a stock appreciation.
Right. Mr. Misra, what will be the delivering roadmap for that $4.7 billion VRL debt, and how will the debt be repaid?
No, so once it is no, but every unit will follow the path that has been there as far as return to original investors are concerned. So far as today's way of return the money are two streams. One is through the brand and strategic services, other is through dividend, and the same flow will remain as far as money upstreaming for return for deleveraging is concerned.
Right. And Ajay, wanted to understand in terms of a timeline, what will be the deleveraging roadmap looking like?
In terms of Vedanta resources, and you may have seen over the last 3 years, the VRL debt is down from 9 billion down to now less than 5 billion. And that path will remain charted. And now from almost 5 billion, the VRL, the parent company, will go down to 3 billion over 3 years. And in fact, we will do more, we will do faster. So 5 billion will go down to 3 billion over next 3 years.
Ajay, could the company also consider reducing its stake across any of its businesses to try and reduce debt? I mean, is a complete sale of any of the assets also on the anvil, say, the steel business?
Very basic reason for demerger is a value unlock or value elimination, as they call it. And that is already playing out. If you look at last year's Vedanta stock appreciation, it is almost 44%, which is more than 2 times of the Nifty Metal Index. So value unlock is real. Post demerger, it will again continue. Now, one of the options that Vedanta get post demerger, that all the five companies may have differentiated capital structure. There are many global investors which are thematic in each business, for example, aluminium, or say iron steel, or say even oil and gas. Now, that option we will decide once demerger takes place. Right now, we don't intend to divest any businesses. We intend to grow them to the fuller scale.
Right, gentlemen, both of you, thank you so much for your time today. Good speaking with you as always. Okay, let's